sharing. Okay, more people is joining. Tick. Okay, I think we can start, and then I will keep adding all the people that is joining. Okay. So as you can see here, we are going to be speaking about how to buy this construction company, right? This company is for sale on businessforsale.com. I like this kind of website where you can find deals for sale. And then, of course, most of them are through brokers. So I'm not keen to work with brokers, but I have very good strategy to pass that barrier to showing proof of funds and gathering all the financials, right? But in this case, we have this profitable construction company. As you can see, I pick an example where the asking price is not that big. It's just 550K, right? Which is not a huge deal, right? So 550K Canadian dollars, right? With a sales revenue of 1,356K, cash flow 320K almost. So pretty decent cash flow, right? So this example I picked it because construction company is a very important industry, right? In the US, UK, Australia, Canada, it's a lot of construction companies. So this reason I picked this industry to make it easy for you to find a deal. So in this example, you will see how you can make 115K per year net without you being involved in the management, without you getting, involved into the management. So in this deal, the multiple is very little, right? 1.7. This is the kind of deal we are going to be looking for. The deal must be 3x maximum, right? In this example is 1.7, very little, but I would like to get deals in the 3x, 4x maximum. So the lower the Ebitda multiple, the better, right? So yeah, 1.7. The purchase price is 550K and it's making 320K per year, right? So for this, I will put a down payment of 137, right? 25% down payment. If you don't have this money, 137K for the down payment, what you can do, right, for buying this deal, no money down, is using the investor's capital, right? Asking for this money for an investor, or you can get money from the alternative finance market, like invoice lenders, cash flow lenders, revenue lenders, or you can do a mix of them. You can use the alternative finance market plus investors' money. Instead of asking for the total amount or the down payment to an investor, you could ask for half of this, and half of the other money for the down payment, you can get it from the lender. And the rest, the 75%, is going to be seller finance. In this case, we are going to pay in 3 years, balloon, right? This is how we're going to do it. Once you get this deal with a multiple of 1.7 EBITDA, with this kind of asking price, making this kind of money per year, then you can make an offer, a letter of intent of 25% of down payment. This is the total amount. And then you can pay the rest, the fair payments, right? 3 yearly payments of 141K. So total payment in 3 years balloon will be 424K plus the money that you put as a down payment is the total asking price, 550K. So this is the total profit that you want to make per year, 175. But of course, you need to discount the money that you pay into the investors. Let's say you bring an investor on board and you pay in the investor 15% dividend. So you need to pay to the investor 26K per year, right? So he's making 15% annually on the money he puts. So if you discount the 15% you give it to the investor, you're going to end up with this net profit per year, 115K, right? So this is the kind of deals I want you start looking for, right? Deals between 500K to $5 million, right? Because most of the lenders, they lending in this kind of deal size, 500K to $5 million. So this deal is very achievable, right? If you're aiming to buy a $5 million deal, of course, it's going to be more difficult for you if this is your first deal. But this kind of little deals, 500K to $1 million, are easy to close because you can find somebody with 100K. An investor with 100K sitting in savings is more achievable than somebody with $500,000 or $1 million sitting in savings, right? So somebody with this kind of money, you can find it. And also, you could you can do a mix of finding money from the lenders using the company target as a collateral and also investors' money. So that way you're gonna find 20% down payment easily, right? So this reason I made this quick example for you so you can see how to buy this profitable construction company in Toronto. This one is in Toronto, but I saw a lot of companies for sale on microacquire.com. I saw a lot of company for sale in bestbuysale.com, all those websites, right? So you can find that the Ebitda multiple must be maximum 4 times EBITDA. So you have enough money to pay to the seller, enough money to put as a down payment, and the deal is solid enough to get money from the lenders, right? So if you want this example, right, I'm gonna post it on the Facebook group, right? So you're gonna have all these numbers, and you don't get overwhelmed with this math. You can get all these numbers, and you can review this deal, and you can ask me also after the call if you have any doubt about how to do it. So in this case, very simple. We're using investors' money and the alternative finance market, invoice lenders, cash flow lenders, revenue lenders, not traditional banks. We are not using the SBA here. We are not using traditional banks because they normally will request you to put a personal guarantee. They will request that you put some skin in the game, your own money, right? No investors' money. They want to see season funds, right? So yeah, I hope you enjoyed this quick video. I want to do one per week of this kind of examples with different industries, not just this one, which is an asset-heavy deal, a construction company, but I want to do with cybersecurity companies, with digital marketing ones. I want to do with asset-light deals, so you can see how to structure different kind of, how to be creative, creating deal structures with asset-light deals, with asset-heavy deals, also with e-commerce, right? Some of my clients, they buy e-commerce, no money down, using PayPal loans. As you can see, PayPal used to give 500K loans, right? PayPal. So if the e-commerce is using a PayPal account, you can get 500K. In some cases, right now, they lower down the loans to 100K. So you can use the e-commerce PayPal account and get 100K, and that 100K, you can use it as a down payment for, let's say, a 500K e-commerce, right? So I will do a video on the e-commerce side because it's booming right now. But yeah, I wanted to make this one for construction just for now. So if you have any question, please send me a message, and then I will be making one of these kind of videos every week because I think it's very useful for you and for everyone to fully understand how to structure deals, how you can convince investors, and how to offer investors a good return of investment, right? In this case, we offer 15%, which is pretty decent, right? If they put 137K as an investment, they will be getting 26K, you know, just a passive income because they will be a silent partner, right? So yeah, I hope you enjoyed this one, and see you in the next video. Thank you very much for joining. If you have any question, please let me know in comments. Thank you, guys. Thank you. I need to go. Sorry.